Good morning, and thank you very much for making time to join this morning's webinar session being hosted by Petra. Now, Petra is a pensions trustee company and actually a finance house interested in ensuring that your financial future is secured at every point in time, not just with your pensions, but also how you can utilize your contributions as you're working for different things. Now, my name is Sarah Ayi, and I will be the moderator for this morning's webinar session. Think a couple of weeks ago, a week and a half ago, we had a chat on how you could take advantage of our pension-backed loans. And from that, we had a lot of questions from people around housing. And so this is what is informing how you can be a homeowner very quickly before you hit your 60th birthday. I'm here to have the conversation with three other experts, and I will leave them to introduce themselves, and then we can zoom straight into business. So with the only lady in our midst who starts.
Hello, good morning, everyone. My name is Lorenda Awiye, and I'm with the Business Development Department, and I'm happy to be here to have this wonderful conversation on home ownership. Thank you, Sarah.
Most welcome. And then we're moving on to the gentleman in green.
And I'm so happy to join for this very important conversation.
Thank you. So our audience, I think we've had a few chats saying that there was a tiny break when you're making your introduction, Kennedy. So if you could take it for us one more time.
All right, thank you, Sarah. I hope I can be heard clearly now. My name is Kennedy Smith, and I'm with the Relationship Management Department, and I work with Petra as well. And this is a very important conversation, and I'm so privileged to be part of it this morning.
Thank you. And last but not the least, we have a resource person coming all the way from FNB. So we'd have him also introduce himself.
Thanks, Sarah, and good morning. My name is George Asamoah Jamie. I work with First National Bank, where I sit with the home loans unit. We look after strategic initiatives. Thank you for having me, and I'm very glad to be here.
Thank you. So thank you, Lorenda, George, and Kennedy. Please note that if you're watching this webinar from Microsoft Teams, we would like for it to be very interactive. So take some time to leave your comments and questions. This is what even informed the webinar we're having today. But however, if you can't join us via Microsoft Teams, you can equally join us from YouTube or Facebook Live. YouTube, you could go to Petra-Achieve and you'd be able to join us there. Leave your questions and your comments as well. As we go along the webinar, we would like to take your feedback to help us improve. So there will be some polls in the chat session. Please do well to complete the polls so that we can serve you better. Now, straight on to business for today. Home ownership. I mean, the whole purpose of this webinar is to see how easily you can become a homeowner. So first question to Kennedy. What is home ownership for anyone that is watching and is quite curious about the topic? I know it's a common word, but just to define it for the people who are watching us today, what do you classify as home ownership?
Thank you very much, Sarah. And as you rightly mentioned, the name explains itself already. That is home ownership. But as a way of definition, home ownership is having a home of your own, and having a house is different from having a home. So I'm sure as we go through this webinar, we'll be going into details of it. But let me mention that having a home is a deliberate decision, right? And in this webinar, we'll try and talk to the people or everyone watching us in terms of the 3 steps that you go through in terms of in order to own a home. And the first bit of it is that you need to make that decision yourself. It has to come from innate desire to own a home before you move on to the origination stage where you find a realtor, an advisor, or a partner before we get to the last stage, which is the financing and the credit bit of it. So owning a house is a thorough process. What usually happens is that people actually skip the first 2 processes and look at how they can finance it. And mortgage is actually one of the ways you can finance every dream home that you have. And in this webinar, we're going to go into that into detail in order to, for our workers and our employees and customers, understand how they can make that dream home a reality. Thank you.
Thank you very much. Now, to understand that a home is really different from a house, but when it comes to the Ghanaian space, George, could you tell us a little more about the real estate markets and the challenges and opportunities you face as someone in FNB that also really sits on the mortgage desk?
Thanks, Sarah. So the real estate market in Ghana can largely be categorized into two sections. So we have the commercial real estate, and I know that's not the focus of our conversation, but just to highlight, the commercial real estate is, when you look at things like offices, retail spaces, and industrial spaces. And of course, you have the residential real estate market space, which is really the focus of today's discussion. And even in that space, you would realize that over the years, we've seen the emergence of developers, and then the development of gated communities. That's largely by organized entities who like to call themselves developers. And then we have individuals who like to build their homes, which is more like the culture of Ghanaians. A lot of people still like to build their homes. So that's the big picture, for the real estate market. In terms of challenges, there are a couple of them. Some within the control of stakeholders in the industry, some within the control of the wider economy. So you talk about things like, high cost of materials for people who like to build their own houses. You talk of things like high prices. If you've tried reaching out to any of our developers in the past, you realize that when we started this journey of development in the residential space, prices were quite high, but it's good to see that recently we have fairly priced units coming onto the market. Then you look at high interest rates. But if you look at where the economy is now, interest rates in the past seems to have gone up. It has a rippling effect on cost of construction. If a developer wants to take a facility to put up a house, of course, they would have to take it at a higher interest rate, and then they will pass on the cost to the end user. And even for the end user, if you also have to take on mortgages, because of these high interest rates. But these are challenges that, stakeholders, are aware and have been working on. In fact, when I came into the industry about a decade ago, it wasn't as good looking as it is now. Mortgages are highly accessible now. Only a handful of people were doing it, and now there's competition in the market. So even though interest rates are still high, you would find out that there are promos being run by a lot of players in the market. The development space now, there are so many developers around, competing to offer very good priced units and all of that. There's also the challenge of land title, if you've ever tried to purchase a land and all of that. But even that, when you pick someone like the Lands Commission over the last couple of years, they have really worked hard to be able to address the bottlenecks in the title registration thing. So even though there are challenges, I wouldn't want us to dwell so much, because there's so much happening from both government players, from private players to really address challenges in the market. And so, this is to really encourage anyone who wants to come into the real estate space to really come. Opportunities are there from a personal, and that will be the last one, even from a personal investment point. Recently, we know how there have been issues about people's investment in bonds and things. Real estate still remains a very safe place for you to invest in. So yeah, that's a quick one on the real estate market. Thanks, Sarah.
Thank you very much, George. I think that was just diving or dovetailing into my next question about whether housing is really affordable for the average Ghanaian, considering the challenges you've mentioned.
Yeah, it is. It is. And I'll tell you what. The generation before us, right? They built their own houses, and when I say the generation before us, I like to classify myself as a young person. So the older generation before us, they built their own houses while paying for rent and things like that. And you realize on the average, it took people about 15, 20 years, to build. Now, the problem there is you have competing demands. You have to pay for rent, for your current accommodation. You have to pay for your kids' school fees and all of that. And so it takes a while. By the time you're done with a house, even your house would have moved out of fashion. And then now we have the emergence of mortgages, and I think it makes houses very accessible and affordable. Of course, we are aware of the interest rate challenges, but even that, it has come down. When I came into the industry, I recall we used to have interest rates high up north 35% and things like that. It came down recently to about 20s. Now we have a bit of spike in the market, going up and down, but it's affordable now. And when you pick mortgages, for instance, it comes in different shapes and form. So if you don't like to buy a house from a developer, you can even take a mortgage to build your own house. So even for young people, you can start the ladder by getting your own land, and then you can take a mortgage to build your own house. You can do it incrementally. So I have a friend who decided to do a one-bedroom expandable house. His plot size was big enough to accommodate a three-bedroom property, but because of the high cost in putting up a three-bedroom, he started by doing a one-bedroom expandable, and I'm sure in the future he's going to expand to 2 and 3. So affordability, my simple answer is yes. It's affordable for the ordinary Ghanaian. We always have to measure, our pockets to our taste, and if we do, we can access homes.
That's brilliant. Thank you very much. So, Kennedy, on that note, I mean, in looking at all these things, especially when George touched on interest rate risk and all the other things that we've seen, how do you think the economic challenges we face today impacts an average individual's ability to own a home?
Thank you very much, Sarah. I think George actually even stated some of the challenges that the average working class Ghanaian faces in terms of deciding to own a home. Let me just approach this question in this way. So, if you look at the cycle of the average working class Ghanaian, you finish school right after national service, you get your first job, 1 to let's say 3 years, you decide that you want to be a responsible man, right? So you want to get a land, right? Now, when you get a land, you are likely to face some of the challenges that George was indicating. That is land registration, multiple payments, multiple sale by the landowners, and there are 2 outcomes that can come out of that. The first one is either your dream will be shattered for owning a home, or you will sail through that and you move on to build. Usually you put a fence on the land just to protect it, and it will take a long time for you to build, and it comes with other challenges and all that. Now, going through this cycle, it may be tedious for an individual, right? And there are external factors that every individual or every working class may not have even control over, and that is the economic side of it. If inflation is galloping, where cement is going up, price of cement are going up, iron rods are going up, and what have you, you may not have the cash to put up the building within, let's say, 6 months or 1 year, right? So you'll be faced with inflationary pressures. And considering what is happening now, even if you were saving in an investment in order to build a house in the next 3 years, 4 years, you'll be concerned about whether you're going to get the returns that you need. You understand? So the economic challenges are factors that can affect the dream or the dream that you have. But that is where the solution is. You need to have the right partner. And for me, this conversation is very important to me, because it helps us to advise the average working class Ghanaian how you can actually plan towards this decision of owning a home without having encountered all these challenges. And in Petra, what we're trying to do is to provide that platform for every customer or every employee who is under our scheme, the opportunity to plan towards this dream. It could be that you will not build the house in the next 1 year, but there must be a plan. And Petra, as your financial partner, is willing to walk you through that. And also, with the help of the partners that we have, that is FMB being one of them, so that you're able to realize this dream in the future, regardless of the economic challenges that we're going to face. Someone said that the challenges will not end today, and tomorrow might be tougher than today, but the most important thing is that you should have a plan towards your dream. Thank you.
Thank you very much. Thank you for that. And then also the hope that that should bring people. So pretty much why people join today. We've seen all the challenges in terms of economic challenges, and looking at what Petra is trying to do today to ensure that people can still purchase a home safely. Aside all that, what are some of the initiatives that Petra is working on to curb these challenges?
Thank you very much, Sarah. So, I think a lot of people know us to be a pension provider. We've been managing their tier 2 and tier 3, and we've been managing it well for them. Let me say that as an institution, we realize the need that people need to plan for their retirement. And for the past 3 years, as an organization, we spend time to interact with our customers and employees under the organization that we manage, for them to plan towards saving a lot for their retirement. Moving away from that, we think that owning a home is a very important factor in every individual, every worker's life. It's our wish that every person or every employee who we manage will own a home 10 years before he goes on retirement. And that, with that vision in mind, what we are doing is to provide the opportunity for people to buy home outright. So we are putting up initiatives that can help you to buy a house outright. And secondly, I mentioned earlier that out of the 3 steps that you need to consider in owning a home, the key, when you get to the financing bit, mortgage is one of the key aspects of it. We've already rolled out a mortgage facility, which I think we'll go into details of that. But our aim is to help you to use your tier 2 or tier 3 or personal pension scheme balance in order to access a mortgage facility to purchase a house easily, right? And that is one of the key initiatives that we're looking at. There are other things that is in the pipeline. We're looking at, I think recently there was a publication around rent to own model where I think the government is trying to take an interest in that. What we're trying to do is that as a private sector and as your financial partner, we're looking at trying to build a model similar where you can use your pension funds in order to rent a facility that eventually will become your house, right? And I'm sure when we flesh out all those initiatives, we'll come out and communicate to our customers the process. Our aim, remember, is that you should own a house 10 years before you go on retirement, at least. And that is what we are working towards. So we'll be sharing a lot of information on the initiatives that is in the pipeline as your financial partner.
Thank you very much. And to Lorenda, so pretty much we have the ezMORTGAGE product. What is the product and why that name anyways?
Okay, thank you, Sarah, for that question. So based on what George and Ken have already shared, to build a home sometimes takes quite a long period, usually 10, 15 years. And as you said, by the time you're moving into that home, a lot of things would have been old-fashioned or outdated. So we are just simply stating that you don't need to be 50, 55 before you move into your home. The law has made provisions that members can use their benefits to be able to secure a mortgage. So mortgage simply means that a loan given to you to be able to build a home, so your primary residence. The pensions has had made a provision to be able to use pension funds to be able to secure a home. So with Petra, as Ken said, the whole idea is home ownership. But one of the products under this home ownership is the ezMORTGAGE. So we are simply stating that whatever you have in your tier 2, tier 3 balance, you multiply it by 10 and you qualify for a facility worth that amount of money. So if you have, let's say, 20,000, you multiply it by 10 and you qualify for a facility worth 200,000 cedis. So the name ezMORTGAGE just means that we plan to make this process very easy for you. You don't have to stress yourself going up and down, getting cement, getting this, getting that. And the provisions per the sections 103, 113, and 114 which is simply stating that you can use your benefits to acquire a mortgage. We have partnered with mortgage providers. So we have Fidelity, we have ABSA, we have FNB, where they can be able to assist you to acquire a primary residence. So that is simply the name ezMORTGAGE, to make it the process very easy for you as much as possible. So it can be done in 3 ways. One, you need to buy a piece of land. As Ken said, you've now started life, and maybe you might not immediately start building, but at least you can acquire land, and then later you can start building. We have individuals who don't want to stress themselves out with going to inquire for this, and that. They just want to buy a home, outright purchase. Your pension funds can be able to assist you to do that. And we have individuals too. Buying a home outright from a vendor when it's fully completed might be very expensive. So if the vendor is almost done, at least 90% habitable, we can be able to assist you to acquire the facility, move into it, and then at your own pace, you can then finish it off. Thank you, Sarah.
Thank you. But did you say 10 times your Tier 3 balance? Because I think that's really interesting to know that if I have 20,000, I could qualify for 200,000 Ghana cedis.
Yes, it's that exciting. You can even apply as a couple to increase your affordability for the product.
Okay, that's good to hear. So you did mention a bit about the different things you could use the loan for mortgage for. What is the eligibility criteria? Should I have contributed for a certain period? Should I have a certain salary balance? What qualifies me for that?
So we have, as I said, I mentioned quite a lot of mortgage. You can buy a land, you want to buy a house that's almost done, or you just want to buy a brand new house. So it doesn't depend on how long you've contributed, but it all depends on how much you have in your Tier 3 and the products that you want to apply for. So and also we also have to factor in how old you are and how many years you have to retirement, because with this pension back product, the maximum tenor to repay off this mortgage is 20 years. So we have to factor a lot of things into how much you need, the facility you are going in for, and how old you are.
Then age really counts, because if you are close to retirement and you don't have enough years to repay back, I'm suspecting. What are the rates that you're looking at for this particular facility?
So the question of rates is very interesting. So in my earlier presentation, I mentioned that we have a variety of providers. So the rates, we are working around the Ghana reference rate. And because this is a pension-backed product, we have negotiated rates that would be very favorable to our scheme members. These rates are better than going straight to a mortgage and provider to apply for the facility straightforward, because you know that you have to make a down payment. Some take 10 to 20%, but we are simply stating that when you come through Petra, we are assuring them that you have that minimum balance, the money will be invested for you, then you move into the facility with zero, no down payment. So we are working around the reference rate. Some are doing +3, some are doing -5. So it all depends on who you want to go with, and then the rate to be communicated.
Thank you very much. And George, so I picked this ezMORTGAGE. How would the repayment work like typically?
Thanks, Sarah. So even before we talk about repayments, let me just give you a snapshot of the process. So if you are here and you are with Petra, and you want to access a mortgage using your pensions, what you have to do is that touch base with Petra. They would pass on your information on your balance, your pension balance, your Tier 3, Tier 2 balance, and all of that. Because when we assess you an individual for a mortgage, we consider a couple of things. The primary thing would have been your income. Now, because it's pension backed, we would also consider the balance on your pensions, on your pension funds. So once we have that, we'll do an illustration. We'll let you know how much loan you can qualify for. When Kennedy was talking, he mentioned that the process to home ownership, you have to sit down and plan. And part of the planning, you need to find out how much can I qualify for if I should walk in to take a pension back, mortgage, and you need that amount. With that amount in mind, you can go onto the market, and if it's a land that you think you should buy now, you can do that. If it's a house that you want to buy now, you can do that. Even if you have land already, and with that amount you think you can put up something, we can do that. And we have products to give you for all of this. Now, when it comes to repayment, I get excited because if you look at the collaboration we have, with you on our pension back product, it's actually built around repayment. So traditionally, when a customer comes and then we assess them and then we give them a mortgage, they are required to make monthly repayments. I think Lorinda mentioned already, the mortgage tenor is up to 20 years. So if you choose 20 years, it means that you would have to make monthly repayment. At the end of every month, you make if your repayment is say 1,000 cedis, it means when your salary comes, you take 1,000 cedis and then you pay towards your mortgage. Now, what the wonderful thing about our pension back mortgage product is that Petra would be assisting you in your repayment. So if you have to make a repayment of 1,000 cedis, when we do the calculation, Petra might be paying say 300 or 400 for you, and all you have to do is to pay 600. So I mean, you get to keep more of your income and spend it on other things. That's a wonderful thing. So to the earlier points, it cannot be a better opportunity than this to access a pension back mortgage. We ask everyone to come and do that now.
Great. So I think the repayment is really easy and it's relaxed because you already have a tier 3 with Petra. So I wanted to find out what happens if someone is retrenched during the period they are holding this facility for. They lose their job. What happens?
So
So I'm going to ask it in
again,
two
thanks for
ways.
that.
If you are
Right.
retrenched or if you die, either of those two, what happens?
Yeah. Yeah, I mean, again, so like I said, we've come a long way in the mortgage market. Now we have insurance providers who are ready and willing to offer cover. So there's a life insurance cover, for mortgage. It's optional though. Normally, when you take a mortgage, the only mandated insurance that you should take is to cover on the property itself against fire and allied perils. But there's an optional life insurance that an individual can take. And the benefit of that is that, like you mentioned, if you should fall ill in such a way and manner that you are not able to work and continue paying, because mind you, your source of repayment primarily is coming from your income. The insurance cover, the insurance will come in and then take care of that. They would usually pay off your outstanding debts and then you get to keep your house. Even in the same manner, if an individual takes on a mortgage and unfortunately they should pass on, the life insurance comes in to settle their unpaid debts, and the property will pass on to whoever they left it behind for. So that's how it works. Those are always available for you to pick on once you take a mortgage.
Great. Okay. So Kennedy, I'm sure we've been speaking so much about tier 3 and people are wondering if they can use their tier 2s as well. Now, can an individual use their tier 2 to also secure a mortgage?
Yeah. Yes, thank you, Sarah. So per the law, I think it's clear that you can use your tier 2 or tier 3. You can even use both, right? I think what is important is that how do you use your tier 2 and tier 3 so that you don't detriment or put your retirement in danger, right? Because tier 2 and tier 3 is actually geared for your retirement. However, the law has made that provision for you to use your tier 2 or tier 3 to secure a mortgage for your primary residence. But how do you do that without putting your retirement in danger? And that is where the Petra advisory comes in, right? So yes, per the law, you can use it, but what what we would like to say to our customers is that if you want to take that decision, you need to speak to an advisor, or you can speak to an organization, your HR rep or finance rep, to invite the experts, that's the relationship managers with the partners reps, to come in and walk you through a plan, right? So that if you decide that you would like to use your tier 3, there are some people that they've realized that their tier 3 can actually get them the mortgage facility that they need, or they have some money somewhere that they think that they can actually use that to secure the mortgage without touching their tier 2. There are some that think that they can use both their tier 2 and tier 3 and their personal pension, right? But before you can arrive at all these decisions, you need to speak to someone so that you can be well directed, right? But the law, yes, the law makes that provision, and Petra is putting products in place in order to ensure that it will be easier for people to use their tier 2, tier 3, or personal pension in order to assess the home that they wish, the dream home that they wish to have.
Great stuff there. So you could actually use it, but talk to Petra, and then we can find a way to fit you into either case. So Lorenda, so if I take I know you mentioned in terms of spouses, but today you have people who are listening who have contributions to Petra and people whose spouses work elsewhere. And if if I take it with my spouse, who has a tier 2 or tier 3 with another trustee, how does the process work like?
Thank you, Sarah. So for eligibility, the criteria, first of all, your account has to be with Petra because you're the ones championing the product. So if you have an individual wants to apply with us or a spouse, we have additional products that is called the savings booster, where the individual can bring on board his or her spouse, to open an account and then deposit an amount of money in there. And then we add it up and then increases the affordability or determine the affordability. So first of all, the product or the account has to be with Petra.
So necessarily they have to move their contributions to Petra to be able to consolidate and be able to take this with their spouse. How do I start the entire application process then?
So with the application process, we have forms. So I mentioned earlier that we have a variety of partners. We have 3 so far. So once we have a discussion, and then all of them provide different facilities when it comes to the ezMORTGAGE, different products under the ezMORTGAGE. So after having a discussion, when we finally decide or settle on the provider, we give you forms to fill. You give us some particulars, and we also check your tier 3 balance to also be sure that yes, you can really you qualify for the facility. Then we take it up from there.
Great stuff. So finally, to maybe last but one before we go into the questions, just to remind you that if you're watching us on Microsoft Teams, on YouTube, on Facebook Live, kindly drop your questions and comments or concerns to the chat box. I will be attending to them in a couple of minutes. Now, Kennedy, can I withdraw my tier 3 after taking the mortgage?
Yeah, so yeah, I actually was waiting for that. Yes, so let me just create a scenario. Maybe today you have 100,000 in your account, but the features that we've mentioned, it means that you qualify to take about 1 million, right? I think George alluded to the fact that in taking a mortgage, there are 2 things. There's qualification and there's affordability. The qualification is that you have 100,000 in your tier 3 or tier 2, and it qualifies you to take about 1 million per the feature of the product. However, we need to check your debt service ratio based on your net income, right? So if you are earning, let's say 5,000, and per your debt service ratio is, say 50%, the maximum, that means that you can only pay a maximum of 2,500, right, to service your loan. Now, in doing that, it can disqualify you, or it can cause you not to afford whichever amount you would like to take to buy your dream home, right? And that is where the continuous contributions that you are paying into your tier 3, all right, comes in, right? Today we don't have a model like that, but what we are trying to if you've hedged it against the 100,000, assuming you're even successful and you've hedged it against the 100,000, the excess that you have per the company's rules, you can actually have access to the continuous contribution that you are receiving for your within your tier 3, right? But if there is a plan in terms of how you can finance your loan or cost in order for you to pay your loan at a shorter possible time, you can actually factor the excess contributions that will come in after you've taken the loan, right? We are working on a model like that to see how best that can be done on a wholesale scale, so that if individual is still in employment, has taken a loan and is in employment, he can actually service with a continuous contribution. But to answer your question directly, yes, the excess funds that you get in your tier 3 scheme, you can assess it based on your company's rules. However, if you want to afford a higher amount within the 1 million bracket, it means that we can look at other models or other things that we can use your excess funds in order to help you to qualify and also pay off your loan in a shorter possible time.
Thank you very much. And my last question to you before we dive into Q&A. So if there's an employee that's listening or an employer that's listening that wants us to actually come and talk to their staff about this clearly to suit their needs, is Petra in the position to do that?
Oh yes. So I think for the past 3 years, we've been running models on retirement planning. I think somewhere in July we started working on helping people to plan towards their home ownership dreams, right? And once that desire is there, you can reach out to your HR or your finance person, who's your contact person that we know. They'll reach out to the relationship management department and will come in. The relationship manager will come in with the advisors, our advisors, as well as reps from our partners, so that we can walk you through the details of the product. Then we can move on to the next phase in terms of planning with you as an individual. Please keep this in mind that mortgage is an individual decision and it's situational. So after the broad conversation on the company level, there has to be a one-on-one conversation with advisors and the partners, the reps from our partners, and that opportunity is there. So please, you can reach out to your HR, they'll get to us, then we'll come in. Also, if you're a contact person and you're on this call, you can actually take the initiative to reach out to your RM or send an email to relationshipmanagement@petraonline.com. Then we'll come in and begin that conversation with the employees.
Thank you very much. So Petra is available to further discuss with your employees on the mortgage product and then also the loan product, I suppose, if you so wanted to be. Great. So we're going to go straight to the questions. Just note that if you're interested in the chat sessions as well, we have left links for you to complete. So if you want us to, as Kennedy said, this is an individual decision. So if you want us to contact you directly and have a conversation, we could do that as well. So the first question is coming from Carl. And Carl says that, do you need to have worked a number of years before being eligible for the mortgage? Anybody can take this.
So,
Yeah, sorry,
as I mentioned,
if
okay.
no, Lorinda, go ahead.
Okay. Hi, Carl. As I mentioned earlier in the presentation, it is not the number of years you've contributed into the scheme. It is how much you have in the scheme that is able to determine the affordability for the product. Thank you.
Any other thing anyone wants to add?
No, sir, I was just going to say that now for mortgages generally, you don't need to work for a particular number of years before you apply for. You just need to show proof of income and yeah, that's all. You will be able to. Thanks.
Thank you. So to Kennedy, kindly confirm, this is anonymous. We would like to know who we are talking to. So for those asking the questions, please put in your name so we can be able to really trace who you are and acknowledge you rightly. So this is anonymously being asked, and it says, kindly confirm that the facility being referred to here is both tier 2 and sorry, I'll take that again. Kindly confirm that the facility being referred to here is for both tier 2 and 3. And can clients access their tier 2 and tier 3 for the purpose, or is it just tier 3? And this goes to Kennedy.
All right. Thank you, my able friend and customer, Anonymous. So yes, for the product that we are referring in this conversation is actually hinged on just the tier 3 for now, right? So today, if you have a tier 3, you can use your tier 3 to secure the ezMORTGAGE, right, in order to buy your dream home. But what we are saying is that we've put up initiatives to ensure that you can use your tier 2 as well in fulfillment of the law. You can use your tier 2 as well to augment your power to get more funds to buy your dream home. As it stands now, that product is not out yet, but we are putting final touches to that before the year closes. We'll come out clearly with the features of that product where you can use your tier 2 in addition to the tier 3 to access the home. But today, as we speak, the ezMORTGAGE, if you want to access it today, you have to have a tier 3 with us, and we'll go on. We'll start with that. If you have a personal pension like savings booster, as Lorinda mentioned, that also qualifies you to access the ezMORTGAGE as well.
Thank you very much, Kennedy. This is to George. I'm sure this is really something that is interesting. People really don't know that the kind of mortgage we're offering under this facility. How common, Edward says, how common and accessible is a CD denominated mortgage?
Yeah, thanks, Sarah. An interesting one. Yeah, I mean, CD denominated mortgages are available, and there are no restrictions at all. They are available and accessible to the public. Whenever you walk into any of our branches or even go through Petra and you indicate that you want a mortgage, we are more than willing to do that. But let me specify that for pension-backed mortgages, actually, it's a CD denominated because we are asking people to leverage on their pensions, which are CD denominated pensions. So that is CD denominated. But yeah, on the whole, they're available and accessible by all.
Yes, so Edward, very easy, breezy, just like the name ezMORTGAGE. Ikwa says, is there a minimum balance one has to have in their tier 2 or tier 3 funds before qualifying? And if yes, what is it? I'm sure you've answered this already, but just for emphasis, Lorinda, if you could help us.
Yeah, so as I mentioned earlier, there's no minimum balance, there's no maximum balance. It all depends on what you want and how much you have in your account. That determines your affordability. So if you want a facility worth 600,000 cedis, at least you should have 60,000 cedis in your tier 3 balance.
Thank you very much, Lorinda. So this one is from Kwabna Koko. I hope I got your name right. So he says, hi, I'm Kwabna Koko. I work with Ecom Ghana as a field officer. I started building my own house. 1 second, please. I started building my own house about 8 years ago, the challenge we talked about today. And it is about 70% complete. I'm stuck now financially and would like to know how you can assist me complete it by the close of this year. Thank you. So Kennedy, if you could help us with that.
All right, thank you very much, Sarah. So yes, as part of the 3 products that we offer under the ezMORTGAGE, there is a home completion aspect of it, right? Which we can actually have a conversation around it. So for us, we are there for solutions, and I think George alluded to that. That even though we have a string jacket in terms of its land purchase, home completion, and home purchase. It's a bit situational, right? We need to obviously assess the building, the level you've got into, the value of the building based on the quantity, based on the information around the building, the rates, and all that, in order to give you like funds in order to complete your building. So to answer your question directly, yes, there is a home completion bit that we can actually have a conversation around it. What we need for you to do is, after the webinar, please get in touch with our customer service team so that we can get you an advisor in order to start a process for you to complete your building 100%. I want to advocate that by the end of this year, your building should be 100% complete, and Petra is willing to help you to do that.
Thank you very much. So we'll be leaving our customer service and advisor contact details in the chat so that Kwabna, you can directly contact us to have this conversation. Next one says, hi team. So can I merge with my spouse to access our pension funds? Can you give a breakdown scenario on if it is possible, and if it is possible? Lorenda.
Okay, so yes, you can team up with your spouse to apply for the product. So as I mentioned earlier, both of you should have an account with Petra. We add up your we add up what you have in your tier 3 and then multiply it by 10, and then you qualify for a facility worth that amount of money. We also provide for siblings, those who are blood related. That also can be done.
Okay, it's not just your spouse. You can actually do it with your siblings who are blood related, provided you know you will not fight with them in the future. So that can be done. So clarification is required. Is this 10% calculation on your tier 3 and or tier 2 balance, Kennedy?
Okay, so as it stands now, the 10%, as I mentioned, is with the tier 3, right? The qualification is the tier 3. So if you have, let's say, 100,000 in your account, all right, which means that you can access 10 times of it, which is a million. So 10% of a million is 100,000, right? Yeah. So basically, that is how the competition is done for you to determine whether you qualify, which amount that you can qualify for, right? So today it's on the tier 3, but as we come up with a tier 2 product, the features might be different, right? But obviously it will be better and more improved package for you.
Thank you. And I'm sure once the tier 2 product is also ready, we'll still come back and have a session like this on it so people can understand the modalities. All right. So thank you very much, Kennedy. Doris says that I have a land and only have indenture to it. House is 70% complete. I need a mortgage to complete it. Do I need a land title on the land? What confirmation do you need to confirm my ownership of the property to qualify me for a home completion loan? And this, I think, George, you can take this for us.
Thanks, Sarah. Yeah, from the listener who sent that, no, you don't need a land title certificate. Normally, as part of the mortgage or home loans process, we'll do due diligence and we'll check with the Lands Commission on ownership. And the key thing here is that whoever sold you that particular land, should have registered their interest at Lands Commission. If it's not registered, and it will be treated as a first registration. Their grant should just be in order. So just to underline that you do not need a land title certificate. The good thing really about First National Bank, when we offer a mortgage as an additional value, we actually assist you in registering your title. So by the time that you're done with paying the mortgage in the next 5, 10, 15 to 20 years, you would come in with an indenture, but when you come to pick up your documents, you would have a land title certificate, registered for you. So you don't need that. And just to add, for anyone who has started, building or they have a land, they are actually halfway through there. You don't even need a minimum deposit or anything. For you, if you're accessing a construction mortgage, it means that your equity is already in the land that you bought. So it's actually halfway done, and like Ken said, we are more than happy to help you complete your home in the next couple of months.
Thank you very much. So as he's saying, if you are doing a construction, a mortgage, you don't need any minimum deposits whatsoever. And I think it's going to directly be paid to you, right, to be able to use for your property on completion. So yeah, you get the money.
Yeah.
Hopefully we can trust that the money will not buy a new car or something later.
No,
But
we'll track
again,
it. We'll track the money
we'll
and make
track it.
sure
Yeah. So
it doesn't go into a new car. Yeah.
all right, that's good to hear. So this person has come back to say, do you need to submit any documents when you reach out to Petra for a pension-backed mortgage, e.g. pay slips, and how long and how averagely will it take to assess the funds? Lorenda, if you could help us with that.
As I mentioned earlier, we first of all need to check your balance, and we'll give you the forms after having further conversations. We'll give you a form to fill, and then we take other documents too.
Okay, so everything will be specified at the application process. And how long will it take to disperse?
So when it comes to the disbursement, as I mentioned earlier, we have quite a number of providers. Some can disburse within 10 working days, some 21, some 4 months. It all depends on how soon you're able to get documentation that are required. So if you need a property and you now have to go and get the land titles or other documentation, that might also make the process a bit longer. But if you have all these documentation, then we are good to go.
Thank you. So Mami Sewa says, what if I have a land with State Housing Corporation and they have started the construction of my building? Can Petra give the funds to complete my building? And B, I'm not buying a done or partially finished home I'm building. So you're building, but it's been done by State Housing for you. I'm guessing that's what you mean. George, could you assist us with this?
Yeah, well, so and let me because the question is not too clear, I'll just answer with a few assumptions. So in the past, we've dealt with customers who have bought land from State Housing Company. The key thing is that your land title shouldn't be in dispute. So if you have a direct grant that's coming from State Housing, we'll run our due diligence, and if it checks out, we are more than happy, to offer you the loan. And what I hear is the construction is being done. So if the construction is being done by a contractor, a third party entity, in this case, if State Housing is building for her, so for mortgage, because it's a contract between you, the individual, and the provider, so in this case, First National Bank, the money will be disbursed into your account and you go ahead and pay your contractor. If it's a construction loan, like I said, I think I indicated in my earlier response that we track it. We track it by giving you the money in tranches. We give it to you, you build up to a certain level, we come on site to inspect and make sure that, it has been done just as you said it will be done, and then we'll give you the subsequent tranches for you to finish. So it doesn't matter if you're building using a contractor or any other person. Thanks.
Thank you. Thank you very much for that. So, Mami Sewa, you can actually speak to us and then the disbursement can be done to you in tranches. Carl has come back again and he says that for the repayment plan, can you also do a principal reduction so that you end up reducing the monthly payments? George, if you could help us with that again.
Yeah, Sarah. Yeah, that you can do that. You can do that. And I'm glad Carl asked that. In fact, the data we have on our books, having done mortgages since 2006 indicates that even though most people will walk in and say, I want to take a mortgage for 20 years, majority of the people actually end up paying way ahead of schedule. So, typically your repayment is 1,000 or 2,000. But, once in a while, a bonus comes your way or a lump sum amount comes your way. You can always walk in and come and do a principal reduction, and that will help you, pay your mortgage earlier than scheduled.
So Michael wants to know, can you confirm whether or not the rate is fixed once one signs up for the mortgage facility, Lorinda?
So it also depends on the provider you want to go with. We have ABSA that is open to do a fixed rate. So you're going to pay a fixed amount of money over the loan tenor. And we have the other providers too who base it on the reference rate plus or minus. So that is variable. So with ABSA, if you are willing to pay maybe more than 15 years, then you are subject to the variable rates. But if you are very certain they are going to pay off within 0 to 15 years, then they are going to place you on a fixed rate.
Thank you very much. So that was from Michael. Yeah, so the rates vary depending on the provider and the tenor that you want. Doris also has come back. I don't know if it's the same Doris too, but if after taking the mortgage you decide to repay earlier than the agreed number of years, do you get interest reduced? I'm circling this back to George since we spoke about returns not long ago. Sorry, rates
Yeah,
not long ago.
Yeah, so that it actually works in the sense of prepayment. So normally the way prepayment works, once you paid earlier, obviously you pay lower interest rate because we give our money to you for 20 years. It means you pay it back with interest for 20 years. But if you want to pay it for a shorter period, you pay it with less interest. So that's how it works.
Okay. So the lesser the period, the lesser the interest rates, the interest you have to repay back. But the longer the period, because then the money is also being affected by inflation, exchange rates, and every other thing, then you have longer or more interest to repay back. Thank you. Um, did you say that Petra will make the payments for you? How will Petra do that? Kennedy.
Okay, all right. Thank you very much for the question. So, well, let me just try and clarify what I said. So, as it stands now for the ezMORTGAGE, if you take it, you finance it yourself. That is after we've gone through the process where we've used your tier 3 as a balance to secure it, and you can afford based on your net salary. All right, you will service the loan accordingly based on the terms of the loan. All right. What I was talking about is more on the futuristic plans that we have in order to ensure that you can afford and also pay your mortgage within a shorter period of time, right? So what we are doing in Petra is an ongoing process. Now this facility is up and running. We are currently having conversation in order to improve this package, where we can make the loan like affordable, more affordable. Let me put it that way. It's already affordable, more affordable for people to take the loan, and secondly, most importantly, also get them to make the payments quicker without defaulting, right? So today we cannot service the loan on your behalf, but it's something that we're looking at in order to use your future value or future investment in order to see how best we can use that to defray the loan. But I'm sure when the model is up and running, we'll come back and circle back to you to give you the details on how that works.
Thank you very much.
Sarah, perhaps maybe I should give some
Okay,
clarity there,
sure.
because I suspect it was to something I said earlier. So with the pension-backed home loans product from FMB, like I indicated, it has a unique feature where the pension trustee will pay a part of your mortgage repayments for you, and I suspect that's what the listener was talking about. They won't pay your entire repayment based on the calculation. They will take a portion for you. It could be 10%, it could be 5%, it could be 20%, depending on the amount you have in your tier 3. So I suspect that's what they were talking about. But to highlight, they won't pay all your repayments. It will just be a part. They will support you. Thank you.
Okay, sure. Thank you. So as Kennedy mentioned, some of these things that Petra is looking at are more futuristic. And so although FAB does that separately, Petra will be doing that, but not now. So today it will be coming from your income, and your tier 3 will serve sort of like a collateral to reduce your repayment. So someone says, if you have a land and you want to build instead of buying a complete home, what's the process? I'm sure we've touched on it already and said that we do offer home construction and mortgages where your land is already the equity, provided all the documents have been perfected, and our providers have done their due diligence just to ensure that there's no dispute. So please speak to us. Actually fill the link for the forms for those we need to contact, so we can have further conversations with you on that as we go along. So Anonymous, you can do that for us. Next question from Azaria says, can you go over the payments plan and how would it affect you if you have a personal loan? Do you still qualify? Kennedy.
Yes, so thank you, Zara. So yes, you qualify if you have a personal loan. However, the caveat is on your debt service ratio. So I am also want to address this question with some assumptions that if you have a personal loan, you are using your net salary to actually defray. So if your net salary is 5,000 and your service ratio is 50%, that's 2,500, and you're already taking servicing a personal loan, let's say 1,000. It means that you only have 1,500 left in order to actually assess the mortgage, which obviously reduces your ability or affordability, power. You understand? So it's you qualify once your credit ratings are okay, and based on the debt service ratio, you qualify to assess. But it's a bit situational. It depends. It will, usually mortgage, you analyze a lot of things in terms of the risk of the individual in question and things that the individual is looking at. So, but just to directly answer your question, yes, you qualify if you have a personal loan, but it's hinged on the debt service ratio. Thank you.
Sarah, can I also add something? So we have another feature under this called the debt refinance, not debt consolidation. We have a provider that is willing to absorb the first loan that you have, add it to the mortgage loan, so that it becomes one loan. So they pay off the old provider, the one who gave you the loan, and then add these two loans up, and then you can apply for the mortgage facility.
Thank you very much, Lauren and Ken. So Benjamin says that, please, if I have an affordability of 2,000 CDs, how much mortgage can you get relative to a 3 or 2 bedroom house, and at which area in Accra? Very specific question. We need to have further conversations on that. So Benjamin, please fill the form. And for every other person that's watching, Accra is a very big place. What I know from what we have said today is that if your tier 3 is like 2,000, you qualify for 10 times that amount. We'd also look at affordability. But speak to us, fill the form and we'll contact you. Question is very specific, but thank you anyways. Richie says that now that the economy is not vibrant and one loses their job, if this person is on a mortgage, how do you treat repayments during the time the person is not working? George, could you help us with that?
Yeah, so generally for mortgage, like I said, your repayments is largely on your income. And so if you lose your job, you would really have to work out how you would pay. Just that I know the thought out there is that once you lose your job, the bank comes running to you for the house. Normally, it's a long process. It's a conversational thing. You would have to come in, let us know what the situation is, what you're doing about it. But again, even though we don't encourage people to lose their pensions, the extra cushion that comes with pension back mortgages, that if you should use your tier 3 as collateral, right? And at the point where you've lost your job, there's enough money in your tier 3, for instance, to cover your unpaid debts. It means that the bank will not come for your house. You get to choose whether we should take your tier 3 so that you can live in your house. And personally, I think that's better, because you can imagine someone who buys a house, in a neighborhood, and 5 years, 6 years down the line, they've contributed enough in their tier 3. They wouldn't want to lose their house, because prices of houses will be high up there. So if it's they took the loan for 10 years, they paid 6 years, they just have 4 years to pay, and then they have enough money in their tier 3 to offset it. Why not? Why don't we take that and then you keep the house? So that's how it works. Thanks.
Thank you. So it's very conversational. They won't immediately come for the house. We'll have to go through a few processes. And also because your tier 3 is 7 as a collateral, that's pretty much the first place we'll look at. Kay says, Kennedy mentioned that Petra would pay a percentage of the monthly repayment. How does that work? And will Petra be deducting from your tier 2 or 3?
I can see my wonderful customers actually are really interested in this model that we are looking at for the future, and it's really encouraging to be getting feedback around that. Yeah, so okay, the details of the model is not working. It's not in place today, right? But what we're saying is that we're looking at a model where it's not Petra that is going to pay it for you. It's actually your interest income on your tier 3 balance, right? If you have 100,000 and you assign it to assess a mortgage, I'm assuming that you'll continue to be in employment, so there'll be continuous contribution coming in, right? And in some cases, after we've done the plan with advisors, in some cases we even tell you to bring in more funds from maybe other investments in order to accrue more returns for you that can help you to repay tier 3, right, and your mortgage. So is the value or the interest income that you earn on your tier 3 balance is what will pay or defray some of the mortgage repayment balance that you have. But that features of the product is not in place today. All right, it's something that we're looking at. It's a model that we're putting together. You agree with me that it comes with a lot of administrative work. So we're looking at how best we can handle that, and very soon we'll put that out into detail together with the tier 2 as well.
Thank you very much. And to Lorenda, so this question or questioner says, do you provide real estate agency, or we can suggest the developers we want to use?
Okay, so one of the beauty of this product is that we have the providers, the banks that we are working with. They also have developers and then vendors. So we can provide you a variety to choose from. But if you also have a property that you want to acquire that is not in the vendors list, you can bring the person on board. Then we also vet the person. Then the transaction can be completed.
Thank you very much. It says, can I pay the loan with large chunks, or it has to be monthly payments? So George has already touched on it, but just to reiterate.
Yes, you can. You can. In addition to your monthly repayments, if you have large amounts, you can always come in and pay that. We call it a principal reduction. You can do that.
All right, thank you. And can someone who is currently not contributing to tier 2 or 3 due to one reason or the other, e.g. has become self-employed or traveled, but has a good balance, still qualify? Lorenda.
As we mentioned earlier, we have another product called the Savings Booster. So this individual who is doing his or her own work or self-employed can just complete the Savings Booster form, deposit the funds in there, and then we can have conversations about affordability and then repayment.
Okay. Now, if you have 100K, 100,000 Ghana cedis in your tier 3, is it possible to offset part of the loan with it, since it can reduce the tenor or even the repayment amount, Kennedy?
Yeah, thank you very much. So if you have 100,000, let me just try and put the question in perspective. If you have 100,000 today, all right, what we're saying is that it will qualify you to, and it's an assignment product. It will be assigned to the package that the loan amount that you qualify for. So you qualify for like 1 million, right? However, if there is additional contributions that comes in, maybe you build that up maybe for like a year, 2 years. As George rightly mentioned, you can use that to defray the principal as a principal payment. It means that you redeem that money, all right, and you can use that to defray the principal amount as a chunk, as a lump sum repayment. But what I mentioned also is that we're trying to find a way that that process can also help you in order to reduce the tenor of your repayment. So when we flesh that out, I think we'll come out and communicate that to our customers. But yes, if you that option is available, but the money that you assigned from the beginning of the package, that one is treated as assignment, and it will stay within your scheme.
All right, thank you. He says that, and still on Kennedy, is the advisory service free, or does it come at a fee? If so, how much, please?
Sir, I'll be interested to know who has the question. You have a name?
It says T.
T. Oh, okay. T. Would you like to pay for such a service? That's just a rhetorical. Maybe if you can drop it in the chat box. So yeah, T. The service is free, and as your able financial partner, we are not just interested in your pension funds and planning for just your retirement with your tier 2 and tier 3 balances. As you can see, and as we've discussed in the past 1 hour, we are moving into getting you to also realize your dream home. And we have advisors in place, we have relationship managers in place, we have business development officers in place, and we also have reps from our various partners that we have that will join to ensure that we give you that advisory services. As we speak now, is for free, but I'll be glad to know if you think that you are willing to pay for such service. But it's free for now.
All right, thank you very much. It's one of the freebies Petra gives out to their customers, free advisory service, not just on the mortgage, but also on any other thing you feel financially you want to plan for. Finally, Lorenda, can Savings Booster, maybe those who don't know what Savings Booster is, but can Savings Booster be used for this purpose?
So, first of all, the Savings Booster is just an individual Tier 3 account. So it's individuals who also want to have a Tier 3 with us can be able to sign on to this product. So yes, Savings Booster can be used. So it's just an individual Tier 3 account.
Okay, so I think we've come to the end of our questions. I'm not getting any questions from the YouTube family or Facebook, but should we get them, we'll definitely respond to them. Thank you very much, Kennedy. Thank you very much, George from FNB, and then also for Lorenda. Any parting words? I mean, from ladies first, as they say, and then Kennedy, and then George. Any parting words for people who are listening to us today?
So from my end, we want to partner with you to achieve your dreams. And you know that home acquisition is quite a headache in everywhere. So just come to us and we'll find a solution for you. Thank you.
Yeah, Sarah. So my parting words will be that this is a one hour conversation, and I'm sure it has given some insight to all of us in terms of the steps that we can go through to own a home. It might not be exhaustive, but what we are saying is that we are willing to re-engage, and our advices are available to ensure that we give you the best plan. Just bear in mind that mortgage or owning a home is an individual decision. All right, and when you make that decision, you can commit to a plan, and that is what I want you to start thinking about now. Start deciding on. You can close your eyes in a minute, envision the kind of home you would like to be in. All right, and we'll make it a reality for you by putting you on a good plan. All right, so we are open to have further conversation with all our customers. Thank you.
Finally, George.
Yes, Sarah. So to everyone here, we just want to make the point that accessing a mortgage now is easier. A few years ago, you couldn't leverage on your pensions to do that. Now the opportunity has come. We've touched on a few highlights of the products, but like Kennedy said, it's just an hour conversation. If you really want to know more on how you want to use your pensions to be able to access a mortgage, just come to us and let's have a further discussion and see how we can help you. But we are open to do that, help you buy a land, help you buy a home, or if you've started putting up your own house, we are more than willing to help you complete it. Thank you.
Thank you very much. Before we leave, Michael, just slip this in. Also, can you pay lump sums into your tier 3? If you're doing a personal one, not the institutional one, you can actually do that. So there's that avenue. So thank you very much, George, from FNB. Kennedy Smith, Head of Relationship Management here at Petra, and then Lorenda, Team Lead Business Development. This is where we draw the curtains when it comes to today's webinar episode on making home ownership very easy. And I'd like to just end with this quick quote from the US President Franklin D. Roosevelt, which says that real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care. It's about the safest investment in the world. So you can chew on that before our next webinar comes on. And please know that the link is still there. You can actually go and give us your details if you're interested. Would like to make sure that not just that we're managing your pensions, that every other investment, including having a house before you hit 60, so you can enjoy as a young man or young woman, is a success, not just a dream. So please continue to be with us. We will meet you again at the next webinar. Let's still keep it interactive. You need to speak to us. We've shared our contact lines that you can contact us on for anything related to housing and even for mortgages. So thank you. My name is Sarah. I hosted today's webinar brought to you by Petra, and we hope to see you at the next one. Have a good working day. Bye.
Bye. Thank you.
Bye. Thank you.